Welcome everybody to Institutional Hunt. My name is Austin NT, and this is another technical analysis video on Fibonacci retracements and extensions. There is a lot of stigma around the Fibonacci for their ooky spooky magical powers. That is ridiculous in my personal opinion, but it does not mean that they're not incredibly useful. It's just that they're not incredibly useful for the magical reasons that people think that they are, or even if they are magic for some reason, then who cares? It doesn't matter to me, because the fact is that they're effective. But I personally am pretty sure that they're not anything magical about them. It's just because people use them that make them so effective. Either way, they're a leading indicator. You don't come by those often, so we want to make sure that they're in your tool belt as well as mine. And we'll go ahead and take a look at them in a little bit more detail. So first and foremost, what are Fibonacci levels? Theory explanation, which I think, once again, is horse crap. But the theory explanation is that, and it is fascinating, that you can find the same mathematical equation that will represent the physiological structure of a snail shell, your own human body, or the structure of a galaxy. You can find it in flowers. You can find it in just about everything. And it's a sequence: 1, 1, 2, and then it just kind of increases as it goes along. You can look up the Fibonacci extension. I don't have like crazy amounts of them memorized. It's not really the point. But it is useful to a certain extent, and it is really cool. And there is a element of it that's very interesting from a scientific perspective. But is that why it's functional? I don't really think so. And I'll go into that a little bit more in a little bit. But common Fibonacci levels are 618, 50, and 38.2. Mostly people use Fibonacci's for retracements, and that is an injustice in my personal opinion, because extensions are super cool and super useful because they're leading and they can give a general idea of where the market's kind of headed. So that's always a good thing. It's calculated with the percent retracement or extension with respect to the 2 points, which might sound a little bit, gloss your eyes over and fall asleep. But realistically speaking, you don't need to know it all that much. The only thing you need to know is that they're fixed points that are between, measured between 2 points. That's all it really is. So going into why you want to use them, and you'll see this a few times on a few of my indicators, because there are some that just everybody uses, and that is why they work. So coming back to my initial issue with the magic hokum behind the Fibonacci sequence, it's not because the entire world is the markets are being controlled by some omnipotent force or something like that. It's because people use them, and they use them for their trade plans. Big people use them that trade with lots of volume, and it helps shape the market because of the psychology behind those technical analysis tools. So things like pivot points, support and resistance, moving averages, and Fibonacci extensions are really, really, really big deals, and they're going to be something that lots of people use, and that's why they're going to work, because lots of people use them. The market is supply and demand. People make the price. So if lots of people are using that to determine where they think the price is going to be or where the price is going to stop, then it's going to be a hell of a lot more effective. So that's the reason why I think they're effective, but it doesn't matter. If it's magic, but who cares? The reason why I love it is because it's a leading indicator that can predict the market's direction. And that's one of the main things that I use it for, just because it's very, very powerful to have a general idea. So you can set conservative targets, or, strong targets, or, to the pip target sometimes if you're crazy lucky. And you also see that other corresponding things like a huge psychological level or a large pivot point or something like that. But basically, you identify support and resistance levels, or places where the market is going to run into an exhaustion level. And I can explain that in a little bit better, but I want to actually show you a live demonstration of how I, draw a Fibonacci extension, and how you draw a Fibonacci retracement, and how you utilize those. So we're going to go ahead and hop over and take a look at that, and I'll see you in a second. Okay, taking a look at the actual chart itself right now, I've got pretty much nothing on it other than the moving averages, and if I wanted to, I could go back through and delete them, but I don't think it's going to impede our process all that much. The first thing I'm going to do is I'm going to go ahead and put on a Fibonacci retracement on this particular move right here. Now, how you put on the Fibonacci retracement is a little bit more up to you. If you don't like to do it from wick to wick, I do it from wick to wick because I think it's more accurate, and in my experience, it's just been more functional. Now, you'll see specific levels here. You have the 38.2, the 50, and then the 61.8, and those are going to be the most effective and consistent levels that you run across at the moment. And let me delete this for a second because I had an extension on there, and I didn't realize that, but basically, so whenever it comes down to it, the reason why I like Fibonacci retracements and what I use them for isn't to necessarily determine a specific line that the retracement is going to hit. It is going to determine the power of the retracement. So if I look back and I see that it only went to 38.2 and it really had a pretty strong rejection, I'm interested in seeing that market go much, much further because it is just basic law of energy whenever it comes down to that. You know, everything that wants to everything that's in motion tends to want to stay in motion. So let's think about it like this. If you are pushing a rock, a round cylindrical boulder up a hill, it doesn't have to be all that heavy of a boulder. We'll pretend it's something that you can push, but it's still a pain in the butt. And you're pushing one up the hill, and you get almost to the top, and then it rolls back on you, but it only rolls back a little bit. It's not going to take all that much energy to push it back over the hill and then continue to keep going. But if it goes all the way back to this 61.8, which is basically, you know, a 61% retracement, which means 60% of your work was wasted, you're going to be exhausted having to basically do 60% of the work over again. That's really no different between bulls and bears whenever it comes down to that. If you have a huge bullish move and then it pulls back 60%, those bulls are tired. They're like, okay, let's do this again. And they'll push it, and they might be able to push it above the next level or the previous high, but they're not going to have the stamina to continue to push it, and the market's not going to have the stamina to continue to push at excessive heights above that. Can it? Absolutely. Will it? Usually not. And that's wherever you start to get in predictions and everything about potential directions. But regardless, if I am bullish or bearish on a currency, like in this one, I'm, more bearish, obviously, just because of its general shape. But right here in this area, and I'm going to draw a little box. This is what I call the sweet spot. That's going to be between the 38.2 and the 61.8. So if I wanted to make a sell into this market, whenever I was coming off on this move, let's just say I missed, it's down here at this retracement, it comes back up and it gets back up in this area, that's where I'm going to be looking for a sell. I'm going to be looking for a short right around into that place. Now, it doesn't necessarily mean that it's going to be at the 38.2, doesn't mean that it's going to be at the 61.8, but it does give me that idea. And as you can see right here, there's some inherent strength in this market because it really stopped pretty hard at the 38.2, but we do have a wick that went all the way up to 50. So that tells me that, I'm kind of middle of the road between my projections and our extension. I'm going to be more conservative on my extension as to where I think it could potentially go. As opposed to if it just stopped hard at the 38 and then didn't go anywhere else and started to go right back down, that would give me a little bit more of an indication that it's got crazy power behind it. But if it came like to 61.8 and we had candles all the way up to here and then it went back down, that type of retracement, it tells me, hey, I'm still a bear on this currency, but the market isn't as strong as I thought it was, so you might want to be, paying attention to its direction and strength and, looking for positions to potentially make conservative exits. Either way, that is how I utilize a Fibonacci retracement. So, I pick, and I mean, this is a huge consolidation area, so it's not really a great place to give an example, but we're going to do it anyway because all right, so we get another retracement kind of into this 50 area right here, and, that's interesting, but realistically speaking, I actually I like this level right there because I like this extension right here coming all the way up. That kind of gives me some idea. But once again, we have this 38.2 wherever the line really stopped, and this resistance area kind of bounced off of. We still have to calculate this part as the move, though. So if I wanted to determine the extension or the potential direction of where it could potentially go, you can do stuff like this for the move, and you can calculate kind of a general idea of where the market will head off to. So for instance, in a 38.2 generally can pick anywhere between these 2 points, basically the 161.8 and 261.8, because it's the largest power percentage. That's the largest power percentage retracement. So it can predict going pretty far. You would want to think that it's going to go at least to here. And as you can see, this ABCD retracement projection actually hit pretty dang close to the 61.8. Once again, though, if you remember just a minute ago when I was talking about the retracement down here, it had this huge wick that went through and it didn't stop completely. Neither did this one. So the fact that it didn't make it all the way down to its extension wouldn't have surprised me all that much, because it wasn't a complete perfect 38.2 bounce. So that's another thing to keep in mind as well. But the extensions, basically, you're supposed to project your extension of where it could potentially go based on its retracements, and then kind of go from there. So we've got from this one, you've got your potential retracement, and then you've got your direction, and then you just use it to predict where the market's going to go. My biggest thing to take away from this is that I don't generally use Fibonacci by itself. I don't use any indicator by itself, but if I come across an extension and it's predicting 161.8, then I might say to myself, okay, well, it's predicting 161.8. What else is around that area? Okay, well, if we've got like a monthly pivot point that's also in that area, and then we've got an old resistance line, and we've got a psych level, then I can say, okay, that really does look like somewhere where it might go touch and reject off of, and potentially need to, get energy back. But at the exact same time, doesn't always necessarily work that way, but if you use it in conjunction with other things, it's very powerful. The two main uses, though, are to project where it could potentially go and determine the power of the retracement, so you can get a general idea for how strong the continuation move will be. Either way, I really appreciate you taking the time to come here. If you have any questions, or if there's anything I missed, or anything that didn't come across all that clear, I really want to be there to answer those questions. It's important to me. It'll make me super happy to see comments in there asking questions. I'll answer them as fast as I physically can. And if you like the video, leave a like. If you want to see more content or more daily content, subscribe, because I do have a daily video Monday through Friday that is going to be my weekly or next day predictions and next day analysis wherever I plan based on the economic calendar, and I do my risk allotment, and I say, okay, so these are the currencies that I'm interested in, this is what I'd like to be trading, these are my entries that I'm interested in, and I kind of go from there. Obviously, you have to make your own trade decisions yourself, but at the exact same time, I like to do it live, so you can see that between 4 and 5 Central Standard Time. If you have any questions, leave them below. Thank you for joining. And if you have anything that you need from me, let me know so I can do that, because I really want to develop a community in this website. I really want to create a community on this channel, and I really want to build something up, mainly because I work so much better whenever I'm working with people, and I didn't find that the communities that were out there right then were providing me with the stimulation that I really wanted to see. So I said, you know what, I'm going to go be that guy. I'm going to be the guy that creates that community. So I'm going to work real hard to making sure that you're getting your questions answered, and that this is developing into what you want it to be. So let me know if you need anything else. Let me know if you have any questions or recommendations. That would be fantastic. And I will see you in the next video.